Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. As always, we need to kick off with our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, the market's waiting on the Fed this week, and can we expect anything meaningful from that? We also have the shortened trading week with the holiday on Thursday, so very excited to get into this session and see what Rob has to say about all that. So without further ado, Rob, you out there?
I am Zach. Happy Tuesday to you. Welcome to TradeFinder, everyone. And let me go ahead and take the screen and turn my camera on here. Yeah, this is Fed week, and we're wondering if the Fed's going to. It's a 97% chance that they're going to do nothing. So basically, nobody expects them to do anything, but will they say anything? That's going to be what's watched is the press conference tomorrow on whether or not there's any indication of the Fed even considering cutting rates. Lots of financial chatter on the networks this morning talking about there was one person on saying that they think that the Fed's going to guide towards the two rate cuts. Yeah, there was two, September, and then there was debate between October and December as the second cut, and then all of a sudden started working in some sort of a chance of a third cut. I think that's been pretty optimistic. I don't think we're going to get a third cut. I don't think that was ever really in the cards. But some people seem to think so. I still feel like we're just at the two, and September seems to be the date. We'll see if the Fed agrees. President Trump has lowered his rhetoric, the pressure on Chairman Powell, which I think was a smart thing to do because I don't think Chairman Powell wanted to be seen as cowering down, if you will, to President Trump's incessant insistence on cutting rates. And then we also have the Israeli-Iran conflict, which seems to be a little less of a concern as it was at the end of last week. There was some people on the financial networks this morning talking about how the U.S. needs to drop one of their bunker busting bombs because where Iran has there, and the whole thing started because Iran is getting a little further along with their uranium enrichment than people thought. And so, at least what they said. And that's really what started the conflict because they've made statements that they want to wipe Israel off the map. So, Israel was preemptive. And Israel doesn't have bombs that are strong enough to get down far enough to where they believe the enrichment areas are. There's two main sites. So there is some U.S. involvement there, and we'll see if that forecast comes out on dropping those bombs, etc. But Iran has not been very successful on their retaliation to Israel. So anyway, that's the world news. Let's get into looking at the charts. We can see that we are still maintaining even with the movement down on Friday. Talked about this in the U.S. market update. We were a little late on getting that posted this weekend. Sorry about that, but it is posted if you want to go watch it. We had the Israeli attack Thursday night, sent the futures down quite a bit. We were rallying back on Friday till about midday when Iran did the retaliation. The market rolled over and it's like nobody really wanted to go long into the weekend. Then nothing too substantial came out. We had all kinds of social media posts about these big ICE protests that were supposed to happen in all 50 states, et cetera. And there was concern about that. That didn't really materialize the way it was feared either. And so we rallied yesterday, and today we're kind of taking a little bit of a pause. But we are above the 10-day moving average, even on the low of the day today. We'll see where things close. We just had a tick down in the markets from we were rallying, kind of just zigging and zagging to the upside, but moved down. We'll see if that level there on the 10-day moving average holds. But for now, everything is status quo. We got this big zigzag. You know, there's two zigzags within this C wave. So we have a complex C wave, and then there's another zigzag within that one. So double complex zigzags. And as I mentioned a couple weeks ago, they all give us the exact same C wave extension target, which is right at the February highs. So if all this conflict and all this news didn't derail this melt up, which is what we actually have now, I'm not sure what can, unless something really unexpected happens. And I thought what happened in the end of last week was a little bit unexpected, with nuclear talks supposed to be at the G7 this week, et cetera. But that didn't derail things. So what could? I guess really bad inflationary data. We did have the retail sales numbers that came out lower than expected today. So does that help prompt the Fed that the economy is continuing to slow, albeit at a very gradual pace? But we are slowing. The consumer is not as confident, although the consumer confidence numbers for May were really strong, above 60, and anything above 50 is viewed as being positive. So that was May's number, though. Where are we now? A couple weeks into June, with everything going on globally, maybe that confidence number has backed off a little bit. But it was surprising that the May retail sales number was weaker than expected, considering the consumer confidence number was high. If the consumer is confident, usually they're out spending. But maybe debt levels, you've probably heard some comments about that, are starting to affect it. But for now, nothing really changing on the S&P. When you go look at the bond market, which is cooperating as well so far. If we sneak out of this channel here, and I noted that we talk about LAOA, we talk about zigzag patterns, we've added AI, or at least the Hub organization has added AI, which we've benefited from at ewotrader.com. But sometimes just old school technical analysis applies as well. I've always talked about, and I've been talking about this in the LA Wave Masterclass, which we have our last session tomorrow night, the fourth one, that price to volume action always matters. And that's an age-old concept in the world of trading. I think no matter what technical system you use, price to volume should be in there. And then this just really classic upward trend channel here. Now we're in the lower end of it, so we have to watch that. I say that the bond market's cooperating, but if we sneak out of this, then that could change. We don't want to see prices go down. Remember, this is the TLT, so it's the 20-year, and this is prices, so yields are moving opposites. So prices and yields move inversely, and with prices down just a touch, then rates would move up. But we closed down here at the low yesterday. So even though this looks like it's a lower bar, technically rates are a little lower today. So it can be a little confusing when you're looking at the charts. But the bottom line is we want to hold this lower trend line and start to bounce back up in prices and bring yields down a bit. That'll be helpful and constructive to the markets. And as long as we're in this channel, perhaps that's why the S&P is melting up and not having any more of a sustained move. But of course, with all the news that's going on, I think traders are erring on the side of caution, which for right now is just pausing. That was our theme yesterday in the Ewo Trader Live session. Lots of different areas of the market that are on pause, and we'll update those as we go through here. There's the TNX. I know a lot of you like that. And this is the 10-year. Now this is rates, so it shows that tick up in rates yesterday, and a little bit of a tick down today, but we'll watch and see over the next few days. This was a pretty poorly formed triangle, but we did get the breakout. We came back down almost to the point of the breakout, not sure that you can hold that against it, that it didn't actually make it to the point, or you could argue that that was the point of the triangle. Depends on how you want to draw it. You could move this line over here and say, oh, we did hit the point. And that's why drawing triangles is not an exact science. And when some of you say, oh, I don't really agree with where you draw your trend lines, as I've said before, I don't really care because I'm not that technical. I'm not an Elliotician. I love Elliott Wave for the larger view. From a trader's standpoint, I'm not trying to get in the minutia of labeling every little movement that occurs because I think that brings you into paralysis through analysis. But again, so far, cooperation on the bond market and the dollar. The dollar is right at the lower end of this line, though. So just like I said on TLT, we don't want to sneak out to the downside of that trend channel. We don't want to give up this wave three low here on the dollar either. If we start to break down and head down to that wave five, which is a possibility here, we're just holding over the last few days at that wave three low from April. But I keep talking about this, and people are making fun of me because I've said it so many times. We don't want to lose the dollar. And it is very important that the dollar is the bastion of last support. When all the news came out of the Israel-Iran conflict starting, we did get a little bit of a bid in the dollar, not a dramatic one, but a little bit of one. Might have thought that we would have had a little bit more of a move, but there's also some politics being played using the dollar. Our administration is using tariffs, and other countries are fighting back by not buying as many bonds as in treasuries, selling a few, selling some dollars, but not significant because, as I've mentioned numerous times, in ad nauseum, if you will, that it isn't in any other country's best interest to collapse the U.S. economy because we are the consumption engine. They need us to buy their stuff. So yeah, they're firing shots across the bow, back and forth, and this is all the negotiation process. We'll see how it plays out over the coming months, but we do have to respect how symmetrical, and I've been talking about this lately. I really like it when Elliott wave patterns, the 5-wave pattern or the 3-wave zigzags are symmetrical in their formation. I think that gives them a higher percentage chance of accuracy, and this is about as symmetrical as you can get on the dollar. So that is concerning. If we do break below this level, call it around 98 and start to head down to 92 and a half, and that could happen, I'll be a little more concerned about how things go. Now, initially, if we start to sneak down, that could be viewed as a positive because international companies like it when the dollar weakens from a exchange rate point of view. They don't want a real strong dollar. They didn't like it so much when the dollar was way up here. But if the dollar starts to collapse to the point where other countries start dumping them because they don't want to take the losses, then that changes things. It's one thing to, make a little noise and flex their muscles on how they can affect our economy if we get too aggressive on tariffs, et cetera. But then you get the snowball effect. If it starts to go down and they start selling more and they want to get out and start looking elsewhere, that's where a concern could be on losing the dollar. But really well-formed pattern here to the downside. So we'll have to keep an eye on that. So as I mentioned, the beginning of a move down probably would be seen as a positive, but if it continues lower, then it starts to get a little bit dicey. Now, one area of the market that's struggling today is in the cryptos, so we're just going to skip ahead there. We do have this pretty decent symmetrical triangle here on Bitcoin. I know a lot of you like IBIT. I prefer BITB. There isn't really much difference. Both of them have a lot of options and very liquid options. And this triangle here, remember, this breakout day today means nothing. One day doesn't mean anything. The market loves to give head fakes and suck in retail traders that get them to panic, make emotional decisions. You have to have a second day of follow through or confirmation day. If we do drop down again in the next calendar date, I know those of you that keep saying Bitcoin trades 24/7, but it does have a calendar rollover for end of day items and especially for ETFs such as BITB. So today is worrisome because we are back below the 10-day moving average when we had a nice up day yesterday. Do we get follow through to the downside? If so, then perhaps our next stop is down here at the 50-day moving average and this area around 55. So we'll be keeping an eye on where things go on the calendar rollover at the end of the day. Ethereum also following suit here on moving lower, holding its area here of support in this trend channel, which is the exact same channel that it was in back here in February. So we came down, we got a little bit low, we had this big vertical move, and that's worrisome because if we break below 17 and a half, then perhaps we're going to retrace some of this movement here with these gaps. But so far we haven't, and no concern here on the ETHW unless we break 17 and a half. Then we're probably coming down at least to the 50-day moving average, and I'm not sure that would hold on a break below this. You can see how long we've consolidated through here on Ethereum. So not a positive day in the crypto space, but things can change rather rapidly in crypto land. So we'll keep an eye on that moving forward as well. Let's take a quick look at the VIX. Which did hold 17 and a half when it looked like it was going to break down below it and get down towards this 15 level. It kind of looked at it and then jumped back up. We've held 22 and a half so far as well, though. So we're staying in this range between 17 and a half and 22 and a half. So slightly elevated volatility. But this spike that occurred with all the stuff that happened at the end of last week and the weekend really wasn't that significant. Might have thought we'd get a bar at least this size, if not one of these huge bars. But you can see where even though the market sold off into the close on Friday, there wasn't really any significant kind of fear, at least not yet. So just staying in this elevated area of volatility here. And that's about it from where we are on the VIX. Now we get into the areas we were talking about yesterday where we're kind of on pause. I think cryptos are in pause with that triangle. We'll see what happens on the breakout there. Now look, natural gas is trying to make a move to the upside here. So we're getting a little bit of an upward move. Can that hold? Can we start to move to the upside? The chart had relabeled from where it was previously a five-wave pattern to the upside to now it's a five-wave pattern to the downside. And once again, one day means nothing. We're up at the 50-day moving average. But does that hold? And then we move back down. Keep an eye on natural gas and see what happens here. But a little bit of a breakout move. We had added a triangle there on UNG. So we'll see what happens on whether or not we continue to move to the upside here. I think it would be great to see natural gas catch a bid. But once a pattern relabels like this, it has an even higher percentage chance of occurring. So that's why I'm not putting a whole lot of faith in this upward move. But nonetheless, it's a fairly large triangle. And if we do get follow through on the upward move, then we could really run on UNG. So we need one more day there. So where we were on complete pause yesterday, now we're on alert. So we'll call this, being on alert day. And then oil, which from the USO moved down yesterday. And we were talking about this during the Evo Trader Live session as well. What did that mean yesterday? Does that mean that, okay, there's not as many concerns about the supply of oil? Iran was threatening to blockade that strait where all the oil moves through. And that didn't seem to bother things yesterday, but we're back up today. So perhaps we just did some gap filling yesterday and that 10-day moving average rule. We had gotten above the 10-day moving average, gap up, too much separation from the 10-day moving average. We closed that down a bit. Now we're right back in the same spot. I was frustrated by this last week. I was watching the breakout of this triangle on USO, and if we got to 75 and started to break above it, I thought it was a pretty easy trade from 75 to 80, but we never got a chance to do it because we closed right at 75 and then gapped up on Friday right to the 80 level. So there was never you can see where the open on that bar was. It opened right there at 80. So there wasn't a chance to take advantage of that move. Now we watch to see if we can break above this 80 level. I still feel like 60 to 80 is the primary range that we're going to stay in. Wasn't really factoring in a war between Israel and Iraq in that forecast. So you have to adjust if unforeseen things happen. But we'll watch and see if we get a follow through day tomorrow on USO. So everything was paused yesterday, and then now keeping a real close eye on tomorrow. So a lot of stuff will happen. The Fed meeting, press conference, and potential follow-through days on moves today from where yesterday was just a sit on your hands type of day. Don't really make any significant moves. The metals were in the same boat. So we look at GLD. We did come back down to the point of that triangle, which is what we thought might happen yesterday when we came back down. The question becomes now, is this a false breakout? And we're actually going to move a lot lower in the metals? Or was this one of the ways that the triangles break out, which is a breakout, test the breakout, and then run? So there's a possibility of either of those two scenarios. The one that we do know didn't happen was that you break out of a triangle and you just run. So that clearly didn't happen. But this could still be either a test and a move higher or a fake out, a false breakout, and a move to the downside. We will not expand this triangle because on this high, we took out this consolidation area here on the trend line. So this was a breakout, but is it a real one or is it a false one? So we're either going to test and move higher here or we're going to break to the downside. But I don't think we're going sideways on GLD. One of those two things is going to happen. Getting a little bit of a bid in silver as well today. And we had just this nice move. We talked about whether or not we were going to play catch up with silver, and you can see that we are. And we had this breakout move, consolidated for a couple days, another big gap up, and then consolidated that one, and then we're gapping up again. So silver is rapidly playing catch up, which we talked about. So I had noted here that we were overbought short term because we had something on silver and we took it off. And then we consolidated this and allowed that 10-day moving average to catch up. So it's no longer overbought. So we can remove that, take that off. And now we watch to see if this breakout has legs. It would be interesting to see if this breaks higher and what happens with GLD. Does it continue to turn and move to the upside? Even though the low came back to the point, it's technically up right now, but not as much as silver is. So maybe silver really continues to move. That'll be something to watch very closely. Would have been a difficult move because the AI had this target price right here, which is exactly where it went. And now we're exceeding that at this point in time. With the allowance for about a week of consolidation here and the 10-day moving average catching up. So we have moved forward in all areas that were on significant pause. Well, I guess we didn't move forward on cryptos, we moved lower, but we've had a break to the downside on cryptos and a break to the upside on energy. And then the metals as well. So there has been movement in all those areas that were just wait and see in yesterday's trade. Let's go to the DIA, take a look at the other primary markets. I still find this really interesting. As long as we hold 420, there's all this clean air here where the Dow could outperform the S&P. The S&P is closer to its target from the February highs than the DIA is, as you just saw. So I think there's room there for the Dow to outperform. I still feel that way. There could be some rotation. The Qs had gotten right to their February highs, and you can see that we got there mid last week, right to those February highs, and we're consolidating here, but yet staying above the 10-day moving average. And I've talked about how the Dow could be a very interesting trade if the markets resume their upward move. How about the Qs? We've been talking about how they got there first and hitting this resistance area. They were probably going to go on pause, but all the markets really did. And as much as I like that clean air on the DIA, and I'm not much of a Dow trader, it just doesn't really move enough. So it's not my favorite market to trade. I just find the current position interesting. But imagine if we break above these February highs on the Qs, the Mag 7 have gotten a renewed bid, etc. So if all this other global unrest and everything else calms down and we can break above this, so 535 is your area to watch on the Qs. If we can break above it with follow through, we could really be off and running on the Qs. So that would be a very exciting trade as well. But we got to do it first. So right now you're just watching the Qs. I don't think you want to step in here yet. And let's see what happens. If we can break above 535, we get excited. The IWM, which kind of had a little bit more of a response to the downside here than the other markets. We haven't quite made it back down to the point of this triangle breakout. Maybe we do because we are under the 10-day moving average. I've drawn a line right here. That's where you would look for that. So around 205 on the IWM would be the point of this triangle. So we had the triangle, we had the breakout, and we're coming back down. That's also right around where the 50-day moving average is. Would not be surprised to see the IWM come down here to the point of the triangle and that 50-day moving average. And it has a 61.8%, the strongest of all fib levels, in my opinion, wave 4. And boy, if we start to get that wave 5 down in the IWM, that's a big risk off sign, and that could be a negative sign for all the markets, not just the IWM. So we want to see if we can't turn and break above this wave 4 high and disqualify this pattern. That's what we would like to do, is disqualify this and move back to the upside here. That would be really interesting. Going back to the Qs, it's interesting that we don't have a 5-wave pattern here on this move to the upside. And one thing that I showed yesterday, so I want to kind of update that, is that you can change the data points in this software. And if you haven't gone to hub.com and gotten a copy of the software, the LA Wave is free. You can change the data points from 377, which is what I put it on. 300 is the average, but 377 is a number in the Fibonacci summation series. If you're wondering why I would pick 377 to set it, that's why I do that. But even when you bring it down to 100, not only does it not label a current pattern, it takes away the previous pattern. And you don't really want to trade Elliott wave based on a smaller data count. 300 or above is what's recommended, but it is interesting at times to lower the data points, because sometimes it can give you a little bit of an insight into what may become labeling on the larger count at some point in the future, but just nothing on the Qs as far as an Elliott wave pattern, which I find really quite interesting. Let's take a look at some international markets, and then we'll open it up to Q&A before we do our case study consideration. We've got another AI alert to show you. I sprinkle those in every now and then. I mentioned the Hub software at hubb.com. LA Wave is free. There is an option to purchase the AI signals, and there's a discount offered right now if you're interested in that. And so I sprinkle a few in from time to time when there's one that I find interesting. Last week we just did a post. We didn't do an actual idea. Zack will be on towards the end of the session to explain what all that means as we go through and show the AI based case study consideration for today. So let's take a look at some international markets first, update you on what's going on around the world with all this craziness that's been occurring. So we'll look at the Aussie market based on the EWA, and as you can imagine, a little bit of a move down, but the EWA has been on one heck of a run here coming off the tariff tantrums, as you called it, Zach, lows of April. So this big move back to the upside here. And we got above 26. I'm surprised that by getting above 26, we didn't make a run to 27 and find resistance there, because you can see that was the highs back in September, October of last year. And coming back down to test 26, that made sense, but we've broken below it. So we need to keep an eye on that. We'll update that Thursday night for our subscribers during the insiders meeting and see if that has reversed and gone back to the upside, or if we continue lower. Now we have to take 25 back into play if we're not going to get up to 27. So a little surprised we didn't make it to 27 first before this reversal. I thought that again was where the resistance level would be, but we didn't get there. So drawing that line here right on 27. Let's take a look at Canada, which is the market. Let's see if that has affected the news has affected it, because it's shaken off all the tariff stuff and really doesn't seem to care too much about all the war rhetoric either. Just continuing to power higher here on the EWC. We are coming back down a little bit, but we're still holding the 10-day moving average. But we've had a pretty decent run here. And when you look at the DMI, that ADX is really high. It got up to 50. And once the ADX moves above 40, based on the rules of the DMI, it's telling you the strongest part of the move is over. It doesn't mean the entire move is over, but it means the strongest part is. But sometimes this ADX continues higher. It'll get as high as 60, almost never gets above 60. And yet Wells Wilder made the range between 0 and 100 on the DMI. And if I ever had gotten an opportunity to ask him, I would say, why did you make the scale 0 to 100 when it almost never goes above 60? Wouldn't that have made more sense? But um, he's the mathematician. But we're seeing this start to roll over, which means perhaps the EWC does need a bit of a pullback here, and maybe we get a little bit more of a pullback than just testing this 10-day moving average. That wave 3 is still qualified but not confirmed, so there's a chance that we could bounce and go higher. But if we break that 10-day moving average, I would not be surprised to see that 3 turn purple and say that was the end of the wave 3. We're not there yet, but we'll watch the next day or two and see how that plays out. Then if we go over and look at what's going on in Germany, the chancellor was in the U.S. a couple weeks ago, but the whole Eurozone has taken a move down here over the last few trading days, and coming down to, it looks like, test this 50-day moving average. So right through this area here of where we're moved down on the EWG, but perhaps we're just testing the 50-day moving average. But the concern here is that that wave 5 did get extended. I was talking about that in the last number of these live webinars, that we're pretty extended on the wave 5, and the German markets economic data has not justified that kind of a move. So a bit of a correction here is warranted. And if that is the end of the wave 5, and it may be, because we got in the upper end of this tap box, the time and price projection box, remember that if the wave 5 goes past 100%, you're looking for a 61.8% retracement, not all the way back down to the previous 4. So if we draw this fib retracement, the 61.8% level could bring us down quite a bit here on the EWG. That's where we would be looking at that 61.8% level. So you can see quite a bit lower than where we are now and below that 50-day moving average. But that's what happens when you have such a big, huge run like that, is when you go into the corrective phase, it's a bit more of a correction. That's what we got to watch on EWG. But to me, that makes a lot more sense from a macro standpoint than it does from a technical standpoint. Let's take a look at what's going on with the market in India with the INDA or Nifty. I like to look at the Nifty, and we still haven't gotten back above this 100% retracement from this five wave to the downside pattern, but we have labeled a five wave to the upside pattern. Remember, that was just a big retracement move, but we made it all the way back to the previous four, even with an extension to the downside here that exceeded 100%. That's something we got to be aware of on the EWG. What I showed you where the 61.8% corrective move was. Do we correct all the way down 100% on the EWG? That would be really nasty if that occurs. It's a long way before we have to worry about that because we're not even close to the 61.8% level. But we're holding the 50-day moving average here. It's right there on the Nifty. We'll see if India can move back above this level here or if that's the end of this pattern on the five wave pattern. And the only reason that it might be is because the wave four only retraced to that 23.6% level. Remember, Elliott didn't give a whole lot of credence to that level. He acknowledged it was a fib level. He was a big believer in the Fibonacci levels for support and resistance, but he didn't give it a whole lot of acknowledgement in the case of corrections versus impulses. And so when you have a weaker wave four correction, you tend to get a weaker wave five extension. There is a chance that that's it on this five wave pattern, that we're coming back down to the previous four. We almost got there, and we just wait and see. So we're still in wait and see mode on the market in India. Let's let the patterns form a little bit better than this. And what we'd be watching for, if you're curious, is one, can we break this wave five high? If so, then we might be off and running because the tap box shows the potential to move a lot higher. And if we come down to the previous four, if we break that and break this trend line, so here's another one of those old-fashioned trend channels here, like I was showing on TLT. If we break below that lower trend line, then you could have something a lot more nefarious going on in the market in India. And then last but not least, we'll keep an eye on what's going on with China. They've been kind of out of the news a little bit lately with all the stuff between Israel and Iran. But we had this C wave extension go up to 3750. That's where we thought it was going to go. We got exactly there. We had talked about that as a case study consideration. Now we wait and see what happens. Again, note that that B wave correction was only the 23% fib level, which is a weaker extension on the C wave, but we still got there. We still got to the target, and now we're kind of in no man's land here. We're below the 10-day moving average currently. Can we catch ourselves and move back up? Are we destined to move down to this 50-day moving average? Let's keep a close eye on what happens with China. With that, Zach, I'll open it up for questions. Just to give you a bit of a heads up, the case study consideration is going to be on AR, Antero Resources. And boy, do I like this setup here. It's a wave three. It's only a 72% score. That's why it's gray and not green. It turns green if it's 75 or above, which is the preferred level. Personally, I like scores 70 or above, but officially we like to look at 75 or above. But we're in this wave three, and look at this zigzag pattern that we have here. You know, that's my favorite, zigzags within the wave three, which we talked about last week in the Zig-Zag masterclass. And then there's the C wave extension at 61.8%. And the AI target is right between the first primary target of 61.8 and then a potential extended C wave, which would be up around 47.5, the 100% level. So we're a tiny bit overbought now, but not a whole lot. I really like this one to continue to move up at least to this level, but we're going to say that there's a chance that we go all the way to this 47.5 level. And the reason for that is if you put the DMI on here, it's starting to form pretty well here with the ADX moving higher. Until we get above 20, we have to be a little cautious of that, but it seems to be setting up really well. Without the DMI, if we don't get that confirmation, then we may stop here at 61.8. That might be the end of it. A smaller potential move here is a high probability. The extended C wave, we have to wait and see if we get some further confirmation on the DMI. So just wanted to give you a heads up on that, Zach. It'll be AR. Interior resources. So let's go ahead and take some questions.
Sounds great. Let's get right into it. We have a question from Lori on KO.
Oh man, we haven't looked at good old Coke in a while. Um, Obviously, it's a defensive sector play, and with the renewed move back into the Mag 7, it had its nice little run here at the beginning of the year and has just been consolidating since then because money has moved back into things with a little more risk. You can see the wave 5 went right to the 61.8% extension level and then bumped its head. And then we had a rather shallow triangle. It's decently formed, though, because there's a lot of touches or close touches to this triangle. And it looks like we're trying to sneak to the downside out of this, breaking below the 50-day moving average. And with that wave 5 only at 61.8, it does bring in the possibility that we correct all the way back down to this previous 4. Now, if the market starts to get squirrely again and weakens, then perhaps a bid comes back into Coca-Cola. But for now, with all of the interest back into the Qs, the Mag 7, the higher beta names, it's going to be more difficult for Coke. So with KO, I don't think you can touch this. It almost looks like a good short at this point in time, honestly. But if you're looking to go long, you've got the 10, 30, and 50-day moving averages all right at the same spot. And that is, I'll give you the price here that you want to watch, right around 71 and a half. You can't really go long KO unless you break above 71 and a half. And I would be a little more concerned about the downside now on KO than more than the upside. Looks like more of a short than a long at this point.
Very well. Thanks, Rob. Next up, we'll go over to MRK.
Merck, so we're staying on the defensive side of things here as far as the sectors that tend to be defensive minded, and this is healthcare. If you saw Eli Lilly, which has been the star of the show in the healthcare sector, if you will, is down today because it's purchasing a company, and shareholders don't like that because then they worry about how much is it going to cost? What's the hit going to be to the bottom line to absorb the cost of acquisition? And so Lilly, that's been on a heck of a tear, is using some of that market capital, if you will, to buy another company. And we'll see if it's accretive to the bottom line over the coming months and years. But for now, the market didn't like that purchase. Even Merck is down a little bit, but you know where the support is here. You've got tons of support down here around the 75 level. We are below both the 10 and the 50-day moving averages. We haven't had a bearish 1030 cross yet. Maybe we're just having a down day today, but you want to see it back above 80. If you're long, you really want to see it get back above 80. If you're willing to hold it through a test of 75, you can stay there, but a break at 75, that's a definite exit there. So it just depends on what your risk tolerance is literally there on Merck. But for a new long, you got to get back above 80 first.
All right, we'll head over to a couple of symbols for JJ. First one being CVS.
Just all about defensive stocks today. It's really interesting. This session on TradeFinder is always a lot of fun to see what symbols y'all come up with. Bucking the trend of what we just saw with Merck and Eli Lilly, moving to the upside. Gosh, it seemed like CVS was left for dead not that long ago, but they are closing down their underperforming stores. They're doing everything they can to shore up their balance sheet, and they're trying to figure things out. You can see this big move down that they had. We broke below 45 just at the beginning of the year. So look at that move off of those lows from January. We've gone from 45 above 65. That's a heck of a move for CVS. But for now, if you're wanting to go long, you need to wait until it breaks above 70, in my opinion, because there's a lot of resistance here at 70. If it can break above 70, then it brings this wave 5 target all the way up at 80 into play. But for now, it's a tiny bit overbought today, above the 10-day moving average, which occurred yesterday. As you can see on the high of the day, we extended yesterday's high. So that's still constructive, even though it's a tiny bit overbought. If you're long, I stay long. It looks great. We had a bullish 1030 cross. But if you're looking for a new long, I think I would be a little cautious here and wait for a break of 70, because we could come up and bump our heads for a while there at 70 as it tries to figure out if it has enough strength to break that level. Let's take a quick look at the DMI, and it's forming, not quite there yet. We're just breaking above that negative directional indicator. If we get up to 70, we may have a qualified DMI as far as confirming a breakout, and then that could get really interesting. So if CVS can break above 70 and get a little better formation, it's trying, but just a little bit more out of the DMI to confirm the strength, then I think you have likelihood that we will break that resistance at 70 and head up towards 80. So that's definitely one to keep on your watch list at this point in time.
Thanks, Rob. Second symbol from JJ is going to be Akon, AKON.
All right, so it's a AKON. Did
That's how it
I
appears entered, but
AN? We don't have that symbol. Could it be Akamai? Could it be AKAM?
quite possibly. But we can come back to
Yeah,
that one if I get clarity on that.
okay.
Um, let's go over to ZIM
Zimmer.
for Lisa.
Okay. Um, Shipping, which is quite an interesting area to be looking at right now. We got, I wish it was a little better formation of this triangle. And the reason I say that is there's gaps in the upper and lower trend line, where I really prefer more touches. We started off great here with boom, 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 and then we had a big gap here without touching the trend line. And same thing on the way down, where we had a few touches there and then this gap here. It's not the worst triangle we've seen, is better than the one that we looked at earlier today. I forget what symbol that was, that didn't have such a great triangle, but we broke out, and this is going to be in the same boat as what we looked at with GLD. Is this a false breakout, or are we just testing the point of the breakout and then it's ready to run? I think you have to watch this one for another day or two and see if we hold the point of the triangle and then turn and move back up. Then I think you go long. If you're already long, I wouldn't get out yet unless we break below the point of the triangle. So unless we break below here, I would stay long. This wouldn't bother me yet, because again, it could just be a test and then a turn and move back to the upside. But a break below that point likely indicates that that was a false breakout, and then you have pretty good room to the downside there for Zim.
Thanks, Rob. And that second symbol for JJ was actually AKN.
AKN. Okay. Um, Mining stock on the Aussie market. Is that what we're looking at? AKN or AKM as in Mary?
Nope,
AKN.
you got it right.
Okay, so that's in the Aussie market. This is a penny stock, um, trading at 0.8 of a cent there, and that can be wild moves. You can buy boatloads of it. If you're gonna look for some sort of a resource-based stock that you want to play around with and take high risk, Doing it in the Aussie market makes a lot of sense. So, yeah, breaking above this 8 cent level, it could run 8 tenths of a cent. There's 1 cent up here. So, um, yeah, wild to see. And we haven't looked at a cheap stock like that in a while, but it's trending in the right direction. And not much else we can say on a stock at this kind of a price level other than you put some money in it and you forget about it for a while, unless you're wanting to day trade it. Otherwise, you just see if it can continue to move higher and draw in some larger buying, but it can't do that on the ping sheets. It's got to get a little bit higher price than that. It is listed on the ASX though, so that's helpful.
Indeed. Let's go over to Roku for Maria.
We just had a tick down in the markets. I'm not sure if there was something that came out while we've been talking. Gosh, it seems like on these shows, going all the way back to Thursday night, something happens during the live broadcast. Zach, it's wild to watch what happens intraday. The futures are down 47 points now, all of a sudden. Don't know what that news item might have been, but we're right here. Maybe it was just fear of, I don't know. Anyway, um, Roku looks pretty good here as long as it can hold 80. It's made a really nice move off the um, tariff lows and then holding there at 80. A little bit of a move down today, but it was overbought slightly from the 10-day moving average yesterday. I think Roku, Netflix, stocks like that, if the economy is going to weaken, as it showed by the retail sales numbers this morning, then these are stocks that can continue to move, even though Netflix has been on a heck of a tear. As long as it holds above 80, I like it. Even if it broke 80, as long as it holds the 10-day moving average, I'd prefer it to hold 80, but even if it gives that up, as long as it holds the 10-day moving average, because you can see this nice separation here from the cross that occurred back in May of the 1030. And I just think that there could be more there. But that's where your stop's going to be, the 10-day moving average.
Thanks, Rob. And that news might have been, says here that Trump threatens Iran's leader and demands unconditional surrender. So S&P's falling on the escalating Israel and Iran conflict and the weak retail sales associated.
That's crazy because he just came out just before we went on, unless maybe he was misquoted and said he was not going to take out Iran's supreme leader, at least not yet. Maybe he changed his mind, or maybe he was misquoted. I don't know, but okay. That would make sense. And that should be a short-term move down. Again, the market moves on these news things in the shorter term, but it tends not to affect things on the longer end of things.
Indeed, we shall wait and see, I suppose. Next up, we will go over to question from Dominic on IIPR, I believe.
I think we've looked at that one before. Um, just been kind of staying in this trading range. It did show up on the AI drop search with a low score, which meant it was. Now, for those of you that may not know what this means, this is one of the searches, and I had a lot of influence in this, as I did with the AI Impulse, on working with the data scientists on the system that I used before the AI infusion was added to it. I noted that when a stock had a big drop, it was likely to go sideways. So the AI came in and said, okay, well, let's take that a step further. How sideways? And if you get a high score, it's likely to stay within one standard deviation of the price following the drop. If the score is low, then it means it's likely to come up at least to one of the boundaries. And that seems to be where it's headed. Now, once it gets there, I don't know if that adds resistance or not. From the AI, I've never asked them that specific question because you can see that we're there. When we touch that upper boundary, that's what you would have expected with this low score here. So it's done that. where it goes from here, I think, is anybody's guess. That's a difficult one. If you're looking at it from a bit of a quasi, and this is kind of an odd scenario here on an ascending triangle type pattern, and it's not really that poorly formed of an ascending triangle. It's just odd that it's forming an ascending triangle following the big drop. So does it make a huge breakout, take off to the upside and fill that downward gap? Or is this just a long consolidation and slight bounce and then we break to the downside? All I can say is that it looks like it's going to make another move. It moved down at the end of March, and I think you're going to see that again. Um, but again, I don't know what direction that's going to be, but I hope you'll ask that again in the next coming weeks, and we'll see which way it breaks at that point in time.
So this next question is going back to the US dollar for Sean. Can you look at the DX spot one and even with a wave five, could that be a double bottom if support holds, maybe a rally on the dollar?
I hope the double bottom here, I hope, is what's occurring. As I mentioned, I don't want to see the dollar go down to this wave five low, and I would like to see a rally here. We did get, as I mentioned, a little bit of a bounce in the dollar when the Israel-Iran conflict started, and if it does escalate, then perhaps it gets another bid and moves higher. Certainly, this is helping. Having this global unrest is helping to keep the dollar from maybe moving down to that wave five low. But 100% on what you said, it could be a double bottom. We just don't know yet. We have to wait and see if it can hold and bounce. Is that possible? Absolutely. Would it be risky to go long the dollar right now? It would, based on that pattern. So I think we just need to see how it holds that wave three low from April. But to answer your question is, could that be a double bottom? Yes, it could be.
All right, very well. I see we're a couple minutes before time here, so maybe at this time we'll transition over to the platform and I'll post the idea for this week.
Okay. Now bring the chart back up so we can talk about it as you go through your posting, your dissertation. So what I was looking for. So you're gonna take the screen. Yeah, there you go.
Should have it now. All
Right
right
on
there.
cue. Yep, we got it. We can see it.
Very well. So as we can see, we're at a menu view, a jumping off point of everything that this growing platform has to offer. And to confirm, Rob, is this week's case study consideration going to be a post or an official idea?
This is going to be an idea.
All right, so as we see over here on the right toolbar, I can click this light bulb here for ideas, come over to new idea and create an official idea. This one's going to be on AR. So in the symbol search window, I will locate that. And for our target price, it was 47.5. Is that correct?
It is. I would not be surprised to take that one off before it hit that level, though. But yeah, we're going to call it 47. And let's actually call it, I'm going to take that back. Let's call it the AI target because it splits the difference of 46. So we're going to make the target price 46. Sorry about that.
That's no problem. Just a quick adjustment. So as we can see, we'll change this target price here to 46, as Rob just mentioned. And the time frame we're looking at for that, Rob?
3 months.
3 months. So we'll go a quarter out. And as always, we will come back and make this look a lot prettier right after the session is concluded. I'm going to go ahead and publish the idea though, so it's available on the platform for you to come in and interact with. We'll go back to all ideas and see that the idea is now published, available again for you to vote on. We welcome your feedback, whether you agree or disagree. Opposing opinions is what makes markets. If everyone agreed, there would be no transactions for the stocks and indices. There would just be no trades to take advantage of. So even if you disagree, we welcome your opinion. Just please have supporting evidence. And of course, always be considerate of everyone else on the platform in your comments and feedback. So With that, Rob, I'll pass back over to you to add any final thoughts for the session. And I think that'll wrap up today's posting.
Sounds good. I'll bring the chart back up of the AR, which is our case study idea for the week. Zach did a great job of explaining that social media aspect of the software. I just, there's so many things this software does. The eventual goal is to make it the one-stop shop for everything trading. So there's going to continue programmers working around the clock, adding features, releasing new releases, and it just gets better and better and better. But the social media aspect, I love. And the comment you made, Zach, about being respectful of opposing opinions. I think it's always great to post an opinion and then see what other people think. Do they agree with you? Do they disagree with you? Why? Maybe somebody else brings up something you haven't thought of. And that's one of the great aspects of putting it out there to the public domain, because that helps us learn, right? You post an idea based on what you're seeing, somebody else might see something different, and you take that into account. And that happens a lot. Oh, yeah, I hadn't thought of that. Or, oh, I disagree, but I see your opinion, that kind of thing. And it is very respectful. I haven't seen or witnessed people that make fun of other people's opinions. And that's great that we have a community that is very respectful. And that's certainly what we encourage and what the Hub organization wants by creating the social media aspect of it. So with that, we'll wrap things up. We'll see if the Fed gives us anything tomorrow. I doubt it. And, we're going to have these little blips based on news headlines from Israel and Iran for a little while. But in general, the market seems to be shaking it off, at least for now. And we'll wait and see if we can hold this 10-day moving average. We might not do that into the close, but we do still feel, at least at this point, barring anything worse than the news that we know already, potential of moving up to those February highs. So have a great afternoon.